Hi, I'm Pattu from freefincal. A few days ago, the IRDAI had announced that all insurers should compulsorily offer a standard health insurance policy. And they called it Arogya Sanjeevani policy. And they had laid down some broad terms and conditions of the policy. This is more like SEBI asking all AMCs to mandatorily offer an index fund kind of thing, kind of situation where there they say that this policy will have common features and all of them should offer it. Going forward, you will notice that the privates will just offer it, but they will not really promote it, while the PSUs will offer it and they probably will have more takers and so on. There's nothing to really get too excited about this policy. We will have a look at this, look at the features. But before we begin, as you know, the access to the lecture series on goal-based portfolio management is currently in its early bird discount period. So far, more than 610 or 615 people have signed up. About 582 people have actually joined into the group already. About 25 people are waiting. I have to go and give them access after I finish this video. So the early bird discount is 1030 rupees is a one-time offer. I had also I'm going to be continuously adding videos. I've added 2 new videos into the group today. The discount period will end on at 11:45 p.m. On Sunday. Please buy before that. Don't buy it the last time. Then there may be some transaction problems. Already, some of you have reported transaction problems. It's not a problem at my end, but at your end, at the bank end. So please make sure you buy it early enough. Otherwise, the price will increase to 2,570 from then on. So I'm going to be continuously adding new content to this course, and my goal is to build a community of interested DIY investors who want to learn goal-based investing, and I want to add more DIY videos on into the group. These DIY videos will not have general interest. They'll be slightly advanced topic. They will not have general interest on YouTube. So therefore, I would like to add them in there. So if you want to get into the community, this would be a great time to do it. So please do. All right. So get back to this policy. This is a guest post by Anjesh. What is his name? Anjesh Bhartiya. He's a tax man. He's been helping me write some technical posts, and this is one of them. So this will be announced. This will be available from the policy will be available from 1st April 2020 onwards. You can buy it as an individual plan, as a family floater plan. Family will include standard members. It will also include mother-in-law and father-in-law in addition to parents and so on. So you can have a dependent child who is aged 3 months to 25 years as defined, and but then a financially independent child will not be eligible for the coverage. That's all fine, but the problem is that the maximum sum assured is only 5 lakhs. Considering what medical inflation is, this maximum sum assured 5 lakhs is all right, but if you buy this policy, my suggestion is don't. You'll have to get yourself a super top up or a top up policy with a base cover of at least 5 lakhs. You can enter if you're aged. You can buy a policy as a proposer between ages 18 and 65, and there is lifelong renewable benefits. The policy does offer cashless benefit, but then we'll see how it works out in reality. I'm not sure how keen the insurers are with respect to this. I mean, this is something that they have to do. They'll just add it into their bouquet and just leave it at that. That's my feeling, but let me see. The premium will not vary from location to location. In other policies, the premium can be city dependent, but this will be the same everywhere else. Of course, it will be age dependent, and the advantage here is the premium can be paid monthly. There's a monthly premium payment option, which is a good thing, but that doesn't mean the premium will be low or they cannot hike the premium. And the problem is that there is a mandatory 5% copay, which means if I have 100 rupee expense, 5 rupees I have to pay out of my pocket, only 95 rupees the insurer will pay. Please remember, this is 100 rupees of medical expenses, not hospital expenses, medical expenses. There are many non-medical expenses we have to pay the hospital. I've talked about this in a different video. There are other terms and conditions and so on, but there is a waiting period which the details are not very clear. Some diseases will have 24 months period, some diseases will have 48 months period. This the insurer will have to decide. We'll have to look at it. Please look at the terms and conditions before buying. Don't get too excited about this policy. Of course, the good thing is if you buy this policy, you can shift to other products of the insurer, or you can shift to other similar policies of other insurers and so on. All that is fine. There are sublimits, so you have a 2% of the sum insured subject up to a maximum of 5,000 per day. Then for the room rent, boarding and nursing expenses, then the ICU will have a 5% of the sum insured. This is a little better. The good thing is PSUs have a 1% and 2%, I think. So this is 2% and 5% for room rent and ICU. So this is better than the standard PSU policy. But I wish the copay is not there. But I'm happy that they have this. At least they have this much. This is the benefit with respect to the existing PSU policies. The PSU may have to rework or rethink their ideas with respect to that. Otherwise, people will choose this, in my opinion. So the Ayush benefits are there. That's not relevant. There is a no claim bonus of 5%. That's again not relevant. Again, you see all the standard term. People are saying it will be a standard policy. It will be easier to buy. But if you actually look at it, all the jargon is still here. It's not as if the thing is it will be the same across insurers. That's all. We should not get confused by no claim benefit, restore benefit, and all that. Those are all peripheral benefits. If you get rid of them and look at the core policies, then it will be pretty much like any other policy. It's not a big deal. You can have multiple policies, which is good, and so on. There are cancels, buyback period, and so on. I don't like the copay. They should have not done. They should have not kept the copay, because anyway the minimum is only 5 lakhs, and there's no need for a copay for a 5 lakh policy, I think. But my feeling is that the entry into this can be a little bit relaxed, and privates may not push it because of that. They will understand, because privates are always worried about profitability more than the PSU, so they will be worried about too many claims coming from such a policy, so they will not get they will not be enthused to push this. So I wouldn't buy it. Get yourself a proper cover. Don't get yourself copay. I don't think 5% copay. 5% copay is not bad, but still it is unnecessary. 2%, 5% sublimits are better than 1%, 2% sublimits that are existing in PSUs. So in general, there are many good things, but still I think if you can afford a good policy which without copays, without sublimits, it will still be better, and you still need super top-up insurance on top of that. So it's a step in the right direction, but there is nothing to get excited about. For those who cannot afford other policies, this may be a good policy. In that sense, yes, it's a good policy. But if you can afford good cover, get yourself good cover. So thank you for listening. I'll catch you later.